Good morning. This is Larry McMillan with a market comment on Tuesday, February 18th, before the market opens. Hope you had a good 3-day weekend. These shortened weeks sometimes give a little bit of a cross current, especially on the Tuesday, first day of the shortened week. But right now, everything is pretty bullish. I wouldn't say completely bullish, but the S&P 500 chart is strong with momentum to the upside. Making a new high or a new intraday or closing high on 7 of the last 8 trading days. So that's pretty impressive. There is support around 33.40, which was the old highs that we broke through about a week and a half ago. And then major support down at the lows of January there around 32.20. A pullback to 32.20 would be a little bit large. So, just say that support, and you wouldn't feel too good about having the market pull all the way back to there if you hadn't been in a trading position to take advantage of it. But right now the chart is positive, and as long as it's above 33.40, it should still have that upside momentum. There are a few kind of minor sell signals hanging around. One of them is the put-call ratios. They bottomed out in mid-January and moved higher on a sell signal, and now they've kind of gone sideways for about 7 or 8 days. They're still on a sell signal according to the computer programs that we use to analyze those things. So, I guess we count them in the bearish camp, but really the signal's a bit stale. The same thing can be said of the modified Bollinger Band sell signal that we have as well. Meanwhile, breadth has improved, and the breadth oscillators are positive. I wouldn't say they're, overbought or buoyant, but, we'd like them to be overbought, actually, when the market's making new highs, but they're not. So it wouldn't take a whole lot to turn breadth negative again, but right now it's in the positive camp. Volatility. We have the short-term buy signal in VIX on January 30th. That's still in effect unless VIX rises above 19. In fact, on Friday, VIX closed all the way down below 14, which sort of pushed the intermediate-term trend of VIX into the bullish camp for stocks. But this morning, I see that VIX is already trading back above 15 again, so a little bit of weird calculating going on there. I'm not exactly sure what's causing that. It's more than just the 3-day weekend, I think. But in any case, if VIX closes above 1550, that could be a problem, because that would be above its 50-day moving, above its 200-day moving average. And the 20-day is about to cross above the 200-day as well. So if both the 20-day moving average of VIX and VIX itself are above the 200-day, that's usually a warning sign for stocks. So right now we're still bullish, but as we're vigilant as always. Remember, roll your long call strikes up to higher strikes, because that's the best protection you have. And then if the market corrects, you're only losing, at the money premium. You can't do that every strike, of course, but when they get a few points in the money, then roll them up. So visit our website, optionstrategist.com, for more information on our various products, including the Saturday seminars we've been doing. We just did one last Saturday on event-driven trading, and we had a good group of people there, and spent the morning talking about options. So thanks for listening, and I hope to see you again next week.